Hi, everyone. Good afternoon. Thanks so much for joining on time for this webinar. We'll just let the rest of the audience kind of trickle in, and we'll start the webinar officially in just a couple of minutes. Thanks so much. Okay. I think while we let people trickle in, I will just start off the webinar with just a few housekeeping things before we jump into the content of the webinar today. So again, thank you all very much for joining us this afternoon for the webinar hosted by co-organised and elea Foundation for Ethics in Globalization, which will also be featuring impact venture bukaPO. So like I said, before we jump into the webinar, just a few notes to take note of. Your mics will be kept off, but we've ensured that the webinar will still be engaging and interactive for the audience. There will be designated times throughout the webinar for Q&A for both elea and bukaPO. So we encourage you to get involved by using the chat function or the Q&A function. We'll also have a poll coming up shortly, so please do get involved in the poll as well. The slides from both presenters can be made available after the webinar. You can just feel free to reach out to co-organised and we'll get a copy over to you. And just a small note that we will be recording today's webinar, and it may be used for co-organised's marketing and documentation purposes in digital media and in print potentially as well. So just a note there. And if you have any questions about that, you can feel free to reach out to the co-organised team. Just a quick overview of today's agenda. We have about an hour and a half together today this afternoon. Before we dive into kind of the main speakers of today's webinar, I will just do a quick introduction to co-organised and the Temasek Trust ecosystem for those of you who are not familiar with us. After that, I will pass over to Adrian and Jennifer, who will be taking us through the bulk of today's webinar, which is around the topic of bridging the pioneer gap, uplifting underserved communities through entrepreneurial models. And finally, we will be spotlighting a co-organised impact opportunity, bukaPO, who is also supported by elea, which is an Indonesian venture that supports home chefs by providing a digital marketplace for them to sell their food. So just to jump straight into who co-organised is and the Temasek Trust ecosystem, a brief introduction for those of you not familiar. Temasek Trust is a steward of philanthropic assets that aims to catalyze positive impact by advancing planet, people, progress for a sustainable future. TT and its ecosystem entities share a common purpose, which is to build a better and brighter future for every generation by advancing these key pillars. And as part of this mission, TT is also developing new capabilities and vehicles to catalyze impact and scale action. So this includes the support of what we call socioeconomic enterprise and development, and that's where co-organised falls under. So what is co-organised? We are a digital impact marketplace which connects capital providers with impact opportunities. We aim to unlock risk capital and harness the power of the wider impact ecosystem to tackle key sustainability challenges. On the one side, co-organised has this robust pipeline of impact opportunities, which we actively originate through the Temasek Trust ecosystem, as well as other leading industry partners, as seen on the left-hand side. And this allows funders and potential partners access to a wide range of impact opportunities that caters to various needs, all the way from ventures to startups across all the UN SDGs and covering many different impact categories. So to date, co-access has over 100 impact opportunities from over 40 countries, with a strong focus in Asia, but with options to support projects all across the globe. These impact opportunities, as I mentioned, address diverse intersectional challenges and allow direct access to projects from a variety of different impact categories, with the most represented categories being climate, health, employment, and education. Earlier this year, the co-access platform was revamped and built to host ecosystem building functionalities that provide both capital providers and the impact projects themselves kind of a one-stop shop for knowledge-based resources, events, and connectivity to the wider Temasek Trust ecosystem, as well as the global impact ecosystem as well. So the Temasek Trust ecosystem is active across the entire capital spectrum, with opportunities for ecosystem entities and initiatives to collaborate. For example, the startups part of the Amplifier program, which you can see at the bottom there, who receive a recoverable grant through this mentorship program, can work together with co-access as a platform to receive further investments from other funders, both institutional and individual downstream. Co-access, of course, is part of a very big ecosystem, and we are supported by ecosystem of different resources, services, and partners that can support, you on your impact journey, whether as a capital provider or an impact opportunity. This includes impact origination, sourcing, and finding, as well as linking up with co-funding partners to pool in capital for impact projects, and also on the capacity building and knowledge building front as well. So that was a very quick kind of crash course introduction to co-access and the Temasek Trust ecosystem, as well as how these various entities work with one another. We welcome you to connect and partner with us to build the ecosystem pipeline, to feature your project or to deploy capital. And you can also check out the digital platform by scanning the QR code that you see on the screen over there. Okay, so before I pass over to Adrian and Jennifer from elea, we do have a very quick poll for everyone, just for us to get a sense of who is in the room and what brought you here today. So in a second, you'll see the first poll question on the screen. So I'll give everyone just a couple of seconds to answer. Okay. If you've answered the first question, you'll have to click next for the second question as well. So I'll give it a few more moments while the responses trickle in. Okay, we have 14 responses so far and 32 people in the room. So I'll give it maybe another minute. Okay, so I can see that the majority of people in the room are either corporate advisors or consultants. And it's great to see that people are also here to, explore potential collaboration opportunities and also to understand different trends and insights in this topic. So I think that is a good segue to pass over to Adrian and Jennifer from elea, who will take us through the next part of the webinar now. Over to you, Jen and Adrian.
Thank you very much, Erin, for the kind introduction. And thank you very much to you and to co-access for organizing this session and for inviting us to present and share a bit about our work at elea. We are a philanthropic foundation based in Zurich, in Switzerland, and in other parts of the world as well, with the global mandate. So as we are going to share a bit more how we work, But we are very focused on partnering with entrepreneurs on the one hand. That's the main work we do. But on the other hand, we are also always very eager to contribute to the development of ecosystems and be a partner with others, co-investors, other partners in the ecosystem. We truly believe that collaboration and partnership is a key to unlock impact, and therefore we highly welcome initiatives like co-organised, and it's a true pleasure to be involved in this community. So who is representing elea today? I'm one of the partners at elea and the Chief Investment Officer. I'm based in Zurich, and I've been with elea for 12 years now. So I've seen the whole process inside out and been in touch with dozens of ventures from our current portfolio, but certainly hundreds more in our investment process over the years. And it's been always truly inspiring to work with impact entrepreneurs and learn about innovative solutions.
Great. Also, I'm looking very much forward to today's session. My name is Jennifer, and I'm an associate here at elea. I'm also part of the investment team, and I've joined elea around 2 years ago as part of the elea talent program that develops fresh graduates to become impact investing professionals. So for me, it's also always a journey of learning and interacting with entrepreneurs, learning from them and hearing about their stories. So very happy to walk you also through parts of today's session. What can you expect from today? We will talk about how entrepreneurship can create lasting impact for people living in absolute poverty. And we will address challenges that these impact ventures face and how philanthropic capital can support these entrepreneurs. And thirdly, we will go into a bit more how elea contributes to alleviate poverty and explain a bit about our model. To illustrate a bit of the type of impact that we will be talking about, we wanted to share a story from bukaPO, just very high level, and then I will leave it to Olaf to go into more depth as he is the expert. But we wanted to share a story about Rini, this lovely woman you see on the picture. And Rini is a mother who struggled to find formal employment while caring for her children and managing all the household chores as well. But to support her family, nevertheless, she turned her passion for baking into a small home business, selling cakes and meals to her neighbors. But like many other and over 2 million, in fact, informal home chefs in Indonesia, she also struggled to grow her business. She had to face very complex processes, handling everything herself, from going to the market, buying groceries, interacting with the customers, collecting orders and managing the payments. So there was actually just little time for her to focus on the core of cooking and baking. She also had no means to reach a broader audience than her neighbors, as she was excluded from more formal platforms, and that led to an unreliable source of income and very limited prospects to grow her business. And this is exactly where bukaPO steps in, as they have built a digital community platform that connects these home chefs with customers and suppliers for increased productivity. And what this means for Rini is that she gets access to thousands of customers that order through this platform. She gets tools to make all these processes more efficient. She can order ingredients from this platform at lower cost and gets it delivered to her doorstep by bukaPO's logistics service, which also saves her significant time to leave her more room to the actual cooking part, to what she's passionate about. And for her, this means more reliable income, more customers, and for the broader community, this means that they are better integrated into the value chains and which leads then to improved livelihoods and the pathway out of poverty.
Now let's take another example from the current elea portfolio. Both of these ventures are active equity investments of elea. Orcha in the north of India is another example where we invested in about 2.5 years ago. And the problem that Orcha is developing its solution for is really the problem of the smallholder farmers in the north of India. Currently working in Uttar Pradesh, but planning to expand to the adjacent northern states as well. And the problem that the farmers are facing there are very evidently related to the climate and to their very small plot sizes of land. And what this practically means is that often the monsoon, particularly with climate change, the monsoon gets delayed. And in order to stretch the time until harvest, it is absolutely vital to have irrigation. And practically, the solution that's been around for a very long time are diesel irrigation pumps. They have two really big problems for farmers immediately, which is it's very hard to drill a hole that goes deep enough to really access the groundwater that's still around when the climate reaches highest temperatures of 40, 50 degrees, and this for several weeks in a row. And the other problem, of course, is that you need to run them with expensive diesel, which is very costly, difficult to organize at the right time. And then you still have this optimal pump with the limited capacity. Third problem, of course, is the environmental problem of emission that comes with the diesel pump. And that's exactly where Orcha's solution sets in, to transition farmers to solar irrigation. But the solution that Orcha found is actually one where the business model itself is the real innovation. Solar pumps are abundant, they are available around the world, but for this specific use case, you need to build, as I said before, you need to drill a very deep hole. And so that's why a cluster approach has proven to be very effective. You build a solar installation cluster for 10 to 20 farmers. One professional operator is on site and can support the farmers throughout the process. And the farmers actually only pay per use of water. So basically per liter of water that is pumped, and they don't have to buy a pump up front, which they wouldn't be able to afford. And this is a very impactful solution because it allows access to this target audience to irrigation. But this cluster effect has benefits way beyond that. It aggregates demand. So that means it opens access for wider partnerships from sourcing of inputs to access to off-takers, and very importantly, also farmer advice. So helping farmers transition from 2 harvests per season, from 2 seasons to 3 seasons, so 3 harvests per year, which is facilitated by access to advice as well. And Orcha is also a very interesting example of a combination of capital that comes into this organization. It is a capital intensive model. You need to build these installations and then they become profitable over a period of 3 to 5 years, but you need to bridge that gap. So they mobilize grant capital, but they have also now done their seed funding round where we were an investor together with Schneider Electric Venture Fund, with Acumen and with family offices. And they continue to draw in these partnerships from grants funded projects, for instance, with Swiss Re Foundation, but also other ecosystem partners that connect farmers to the wider ecosystem. So it's a very good example for the comprehensive approach that can only be built through entrepreneurial agency bottom up. And over time, the idea is to build a solution that is market oriented and can be investable for a wider investor public. When we speak about this, this is what we at elea have in mind when we speak about impact through entrepreneurship. How can we systematically unlock this type of impact creation? And let me walk you through a few slides that help deduct where we see the logic of making this type of investment and enabling this type of impact. So at the end, when we look at ventures like bukaPO and Orcha, what is the core aspect is really to have an integration, a deep integration of this social impact for poverty alleviation at the core of the business model. It is a key feature of the business model to reach out to these target audiences and integrate them into the business model. And of course, we understand this is not a solution that is applicable to all social problems. Not every social problem can be solved with the business model. But to the extent that it is possible, it allows to create a solution that is then continued support through the market and doesn't need an ongoing continuous inflow of philanthropic or development capital. And that means we can reallocate this type of capital to solving social problems where it is absolutely necessary still. So that's why we believe there is even an, if you will, an ethical imperative to try to help entrepreneurs build these ventures wherever it is possible to come up with business models that can truly integrate impact at the core. And what is a very important aspect here is really this shift from seeing people who live in poverty no longer as just beneficiaries of handouts and help, but really as customers in a system that are treated on eye level, and that is the foundation for building trust over time, and to bring them into this build-up of a strategic market opportunity. These are huge underserved markets, so there is a real growth opportunity here. And that brings me to the next point, which is, why do these business models actually work? At the core of these models that allows for the integration of the impact and the sustainable business model is really the idea of integrating people who live and operate informally into a formal value chain, into a formal backbone that can provide a certain level of scale, that is professionally run, that builds infrastructure and institutional frameworks that are absolutely professional and therefore investable and therefore compliant with all the regulations and therefore also attractive for other people to come on board at a much lower risk profile compared to directly interfacing with people who are informal operators. And this allows to capitalize on economies of scale over time and therefore improve the income of the people who are trading with this system, who are, like in the case of bukaPO, see this as access to market. In the case of Orcha, really procure a vital input for their own productivity. The key thing here is really the integration of informal people into a value chain and opening this to a market that is growing. If we are not connected to a market that is growing, it is practically very difficult to make these models work. So it is super important to find entrepreneurs who understand how they can have this deep impact and community orientation with the deep understanding of how these markets work. And that's why we work with entrepreneurs, because these are all innovations, social innovations that need to be created bottom up. We firmly believe that the true game changer of these models that we invest in is not actually the brilliance of the technological solution, not even maybe the specific selection of components or the understanding of the quality of products. These are all important ingredients, but the real important element is to combine them in a way that is enables local communities to adopt the solution and change behavior over time. And that's why it needs to be built in an iterative bottom-up process, which is the entrepreneurial process. And what we see in the entrepreneurs that we work with is often a very compelling combination of a very strong long-term vision and a very pragmatic way of going about finding this solution, keeping at it, also overcoming all the challenges that come with operating in this market. That's what kind of entrepreneurship can bring to the table. And that's why entrepreneurs for us are really the game changers in this equation, as they are the enablers of social innovation. Now, of course, if they want to build lasting businesses for the long term, entrepreneurs need support, entrepreneurs need capital. And that brings us to the next vital thought, which is that building ventures of this kind is particularly challenging. Every startup faces what is often referred to as the valley of death or the missing middle, or we like more the description of pioneer gap, but it's always referring to the same problem. Once you outgrow an initial base of support, you win a few competitions, you get initial grants, you maybe find first investment from friends and families and other people who are favorable. You have to overcome a long period before the model is fully proven and is de-risked enough to be a mainstream investment proposition. In this market that we try to spur on and help develop, that is focused on integrating people who still live in poverty, by implication have low disposable income, this pioneer gap is just a very severely increased problem. And in our view, it has three main features that need to be brought to the table. On the one hand, it is just financially risky to make these investments. They are not yet fully proven businesses. They have a proof of concept when we look at them. They demonstrate that the business model can work, that there is a market, it can grow, the solution works, it creates impact for people, but it is typically not yet a profitable venture at that point. And so you need to take a lot of risk, not just the typical early stage risk, but also the market risk, the fundraising risk, operating in still markets that are not fully liquid. And this is the first point, is you need to bring a solution for financial risk. Second, these are small ventures. Typically, they have revenue sizes of a few $100,000 typically. And this means you need to invest with a small ticket size. But in order to understand whether this is really a believable long-term proposition, the effort you have to make is almost the same as if you would make a multi-million venture capital investment. Our team operates very professionally. We spend weeks analyzing these ventures, and it's absolutely necessary because that is the basis to then help entrepreneurs take professional decisions. But that means the small ticket size limits the economic efficiency of making these investments, and that needs to be addressed with the catalytic source of capital. And the third point is these ventures are early stage, so they need additional support to overcome this gap. And that's also what we provide. For every Swiss franc that we invest, we typically provide almost an equal amount of money to support the entrepreneurs. And so all of this together is what we believe a catalytic deployment of capital that can help really systematically build up ventures like bukaPO or Orja or the others in our portfolio. And for us, therefore, the ultimate definition of success is really building ventures that have found a sustainable business model, because that means they can operate for the long term and continue to create impact way beyond our provision of capital. We are typically invested for 5 years, sometimes even 10 years. So it takes a long time, but the ultimate goal is to create an organization that can sustain its operations and continue to create impact and therefore create sustainable impact. As a foundation, our goal is also to demonstrate that by investing in these ventures at an early stage, subsequently at the later stage, we can recycle our principal amount of capital that we invest and make this available for the next series of ventures. But the main goal remains to really help the ventures become resilient, strong, and growing ventures that can attract further capital. As such, we are firmly positioned within the impact investing landscape. We refer to our use case of highly catalytic capital as philanthropic impact investing. We mobilize philanthropic capital, but we do this with a very clear investment outlook. So that means that we really want to unlock financial viability as much as a deep commitment to impact that is transformational. And over time, of course, as we help these ventures being built, all broader forms of capital can be mobilized to their support. So that can go actually across this whole spectrum of capital that we see here, from grants that can help build out certain foundations to, over time, more and more commercial investment that is coming into the ventures that can invest once they are suitably de-risked and have become profitable and need growth capital to grow further. But the main point that we would like to make here is really that we should see philanthropic capital very much as a potential use case for impact investing that needs to be integrated in the whole impact investing spectrum. And the main thing is really the impact, the combination of impact and viability from a financial perspective, and applying this with a very rigorous investment outlook and an investment process that is fit for this specific purpose. So why do we believe that there is still this very strong need for philanthropic capital as catalytic capital in this part of the market? Particularly when we look at ventures who aim to create social impact outcomes. In our case, our whole work is oriented towards alleviating absolute poverty. And what we know is that this is a segment that has historically not attracted the most inflow of capital from impact investors. There are other impact investing use cases in the climate space, in financial inclusion, some other segments that have attracted way more investment than deep transformational social impact to help people out of poverty. And it's very understandable why. I mean, I just gave all the reasons why it is very challenging to build ventures that work in this segment, but all the more it is very important that we keep working and evolving the system to make this also a more mainstream and commercially viable part of the impact investing spectrum. When we look at the current situation, we see 4 gaps that still need to be closed. One is really just the access to finance. We need to mobilize more capital for this. And our strategy is really to come in early and help de-risk for others to come in at the slightly later stage, or together with us, we very much like to be co-investors. There is this risk gap that I spoke about. We need to overcome the early stage risk. But I think there is a third very important gap that is related to the risk gap, but it is really the expectation gap. For a certain period of time, you need to lower your return expectations in order to help ventures overcome this initial phase. That doesn't mean that they don't have fantastic growth outcomes in the long term in some cases, but in an initial phase, expectations for returns need to be lowered. In our case, our mandate requires us to recycle the principal amount of capital across the portfolio, and everything that goes beyond that is just an additional ability to create more impact, but it's not our baseline expectation. And then there is a capability gap. It needs special teams, special education, experience, judgment to be able to work in this segment and really distinguish the promising cases from the less promising cases. And that's why we also believe this is part of the incubation process that still needs to work in this market and still requires philanthropic capital. And how we as elea are set up to work in this field, that's what my colleague Jennifer is now going to go into a bit more detail about.
Thank you, Adrian. And coming from this more conceptual view on philanthropic impact investing, we wanted to change the perspective and learn a bit about how elea is set up to systematically contribute to alleviating absolute poverty and support exactly these ventures that, to overcome this pioneer gap. And to echo what Adrian mentioned earlier, elea was founded in 2006, really with the sole mission to fight absolute poverty with entrepreneurial means. This means that we strive to support these visionary entrepreneurs who create these solutions that improve the livelihoods of people living in absolute poverty, which we roughly equate to less than $3 daily income. And we do not support them only financially, but also with knowledge, capacity building, and access to our network. And with a close partnership principle, we work with them over years to create this lasting impact. And how does this work in practice? So our operating model is based on three key pillars that reinforce one another. So the first one you see on the slide, we call elea philanthropic investment management, which covers all activities related to the investment process. So identifying impact ventures such as bukaPO and urja that we mentioned, to evaluating and supporting them, and ultimately exiting again. We invest in innovative and scalable ventures led by these entrepreneurs that have the potential to transform entire communities. And our focus here is really on these early stage businesses that directly improve the livelihoods of these people living in poverty. And later in this presentation, I will go into more depth of how these processes work in finding these ventures. The second pillar we call elea philanthropic investor circle. And over the past almost 20 years now, we've built this network of philanthropic investors, including individuals, institutions, companies, foundations, and family offices, who not only contribute financially, but in some cases also human resources, as well as access to their networks. And as a tax-exempt foundation based in Switzerland, these contributions are legally seen all donations which stay within elea. This means that elea's funding base is entirely philanthropic. And this is also what Adrian mentioned earlier, how we can, through this setup, recycle our capital after the exit. Through this, we can also take calculated risks and really focus on impact first investments without any compromises. The third pillar we call elea Professional Development Program, and this is really the team. And this includes, of course, the investment team, but also like the communications team, the partnerships team, the IT team that make these activities and the impact ultimately really come to life. And these three key pillars is supported by our knowledge base, which is also including our impact measurement methodology and collaborations with research institutions that we have. And with this belief in the partnership approach, where we have built this community base of entrepreneurs, investors, and partners for long-term partnerships, we believe that we can create this powerful ecosystem for impact. This flywheel or this approach led us to the current portfolio, which you see here. So we currently are invested in 31 impact ventures in 27 emerging economies, spread globally, but we focus on 4 areas. You see Latin America, Sub-Saharan Africa, India, and Southeast Asia. And to also strengthen our local presence, we do have opened hubs in Mexico and Johannesburg, besides our headquarters in Zurich. Through these ventures, we've reached over 50 million people, and you see this 2.3 million impact points who come from our impact measurement methodology. This helps us track impact over time and also compare and assess ventures in impact. And I think due to time reasons, I won't go into too much details on our impact measurement, but if you're interested, there is a white paper on it for those geeks amongst you. And here we wanted to highlight, although we are operating globally, we really focus on 4 investment themes that are all driven by the main challenges that people living in absolute poverty face. So a large target group would be the smallholder farmers. And then we also have underserved urban and rural communities that lack the access to really high quality goods at affordable prices. We also focus on ventures that impact youth unemployment as a main challenge to overcome poverty is really still access to high quality education and the link to job opportunities. And our 4th bucket is impacting people that also are challenged by the climate change. Yeah, so we focus on these 4 buckets. And how do we find these entrepreneurs or these impact ventures? So we emphasize on sourcing ourselves. So our investment team looks at over 1,000 companies during a year, which then trickles down to 20 to 30 due diligence per year, where we deep dive into cases, ask a lot of questions, understand where the entrepreneurs is coming from, and this leads to around 5 to 10 investments per year. Sourcing ourselves benefits us in 2 ways. One is really to be there from the beginning, understand the business model, to have this long-term partnership as well, and this support with for the entrepreneurs. And secondly, it also feeds in our knowledge base to really understand what innovations are on the ground, who is acting on what. So this takes around 3 to 6 months from finding to the investment decision. And after an investment, we closely work with the entrepreneurs in any questions they might have. Often this there are topics around fundraising strategy, the governance, where we co-create with the entrepreneurs impact and value creation plan, what we call. And to emphasize that part, we really invest, like for every dollar we financially invested, we also invest $1 of our time in this long-term partnership, which lasts from around 5 to 8 years until this business reached a point where they are ready to attract more commercial investors, or are really able to fly without elea, where we can take the exit and recycle again into a new investment. And how we will do this in the future, I will handing over again to Adrian.
So 2 years ago, we at elea, we set ourselves an ambitious vision for 2030. Why did we do that? Because we believe that we, in the first 15 or so years of elea's existence, we have proven that this dedicated model actually works. We know how to deploy philanthropic capital to early stage ventures, and we have seen initial proof that this can really make a difference in supporting entrepreneurs to build this new breed of ventures that really pioneers these solutions for people to come out of poverty and do this in a way that is long-term supported by the market. We know that there is so much more to do. There is still a level of poverty in the world that is unacceptable. We know that this is essentially an economic problem that can be solved if we do it in the right way. And we believe in all humbleness that our model can contribute to a small part of the solution. And compared to where we are right now, we believe we want to increase our relative share in contribution to this solution. And therefore, we set ourselves the target to increase our impact by 2030 by 3 times. So that means, given where we were about 2 years ago, our target is to impact through the portfolio about 100 million people. But it very crucially also means that we are now ramping up our investment pace. So we target making about 10 investments next year, and then subsequently between 10 and 15 every year. And what we also realize is that by being a global investor, we can really help cross-fertilize insights across ecosystems. And that's where Southeast Asia for us has become a very important part of our strategy. We have made a commitment to increase the relative allocation in our portfolio to Southeast Asia significantly, because we understand that there is still a need to be addressed by a model like this. But we also understand that this is really now an ecosystem on the move. A lot of interest that we see to try to find more sustainable ways of deploying philanthropic capital. And therefore, we are very happy to be more involved in the region over the next years. We just recently closed a partnership also with the Asia Philanthropy Circle and the Asia Community Foundation, that as one of the funds that they have set up, there is an opportunity to concretely collaborate with us on our investment work. And so there are many more opportunities that we are seeking. We are, as Jennifer said, partnership is a very key value for us. And so we are always very open to work with partners, foremost with our entrepreneurs, but with others in the ecosystem as well, co-investors and thought leadership partners. And so we are very open to investigate and to collaborate and to really make our contribution to the further development of the ecosystem overall. And so we are happy to continue this conversation, but thank you very much for listening to this first part, and we are now turning it back to Erin for the next segment.
Great. Thank you so much, Adrian and Jennifer, for your very insightful sharing. We actually have a couple of minutes now for Q&A, and I can see that the audience have dropped in a few questions for you in the Q&A function. So maybe I can start with Jeremy's question. So I know, Jennifer, in your slide, you mentioned that because of time, we don't have time to go in depth about elea's impact measurement kind of process or method. But Jeremy asks how you typically measure the impact of your work and elea's reach. So maybe for like the audience who are here today, just a quick overview of how elea does impact measurement. And we can also share a link to the white paper that you mentioned as well.
So maybe I can start, and Jennifer, you can add later. So in our work, for us, what is very important is to really get at the right insight into the combination of breadth and depth of impact. We believe in scalable solutions, but we also believe that we need to adequately factor in the depths of transformation that is varied from model to model. And so that's why we work with 9 theories of change that are mapped on our investment teams. and they come to life in what we call our elea impact measurement methodology, which is a multi-factor evaluation that then yields these elea impact points. Why did we develop our own approach? We developed the own approach over 15 years ago and have refined it since, because we realized that this combination of being able to really compare various investment opportunities across sectors and allowing us to develop and track the impact over time, that has simply not been there in a fully developed way, and that's why we keep working on our own method. It is transparent to our board, it is transparent to our philanthropic investors, and it is set up in a way that allows us to always, when we start due diligence, to project out what is the impact that we would expect over a 5-year period. And then every year we do an audited evaluation of what impact has really been accrued over the past year. And that then, of course, allows us to really track the development over time. So this has become a crucial instrument for us to really compare opportunities and report transparently about the development of impact, while being able to do this in a holistic way and in a comparable way across the whole portfolio.
And maybe to add on that, I think measuring impact also creates a lot of trust with different stakeholders, and can thus also be a very powerful tool for the entrepreneurs to tell their story and the impact.
Great, thanks both. We have another question here from Natanya, which is, as you work with different entrepreneurs globally, what are some trends that you're noticing in the way that different social enterprises are evolving, especially if you observe any differences between the different regions that you work in?
Now that's a very, very interesting question that we could spend the rest of the day with. I mean, where we should center thinking around this is really in ventures never come about in isolation. So how they are really plugged into the local ecosystem of infrastructure, but also very crucially of other support systems like investors, knowledge bases, and other entrepreneurs that made similar or different experiences, plays such an important role. And so that's where the divergence around the world happens the most, because of course, as we have learned in some places in Africa, particularly in Eastern Africa, now more and more in West Africa, in pockets of Northern and Southern Africa as well, very powerful entrepreneurial ecosystems for impact ventures have emerged that have allowed ventures to create these embedding of modern technology with community-based use cases. India, more recently, I think, has also been on a very successful path in that respect, spurred on by the massive development of the Indian entrepreneurial system. The segment about deep impact has also grown very significantly. And of course, if you think about the country like India, scale is the opportunity that you can test there first. Whereas in an environment like in Africa, probably what you learn most about ventures is how resilient they are. And in that respect, I think we also need to be very realistic. In the past 5 years, we have seen a number of global shocks that have affected the way ventures can develop significantly, starting with the global pandemic that has been very unevenly received across these various markets in its effects on disposable income, on disruption of public life, on disruption of government spending for infrastructure, for instance. Secondly, we have seen the fallout of global crises. East Africa has been hit very significantly when Russia invaded Ukraine due to the disruption of commodities markets. And we have seen a global change in startup funding sentiment over the past 3 years, which has also been extremely significant and has basically meant that ventures that had tried to build fast growth first and profitability second got into very severe trouble. And so I think for us, what we see is that each of these ecosystems offers a certain combination of lessons. But what we would also say is that fundamentally what stands out, having done this work for 15 years, is really more the similarity than the difference. It is now very clear that this type of venture building needs a certain combination of elements of realism and vision and an entrepreneurial resilience in order to overcome these shocks and to win this deep trust that you need from local communities. So if I weigh these factors, I would always say I'm more fascinated by the similarities, but then of course we should leverage these very interesting learning opportunities that are driven by the differences of the ecosystems.
Thank you. Thanks, Adrian. We still have a couple of questions actually from the audience. So Camilla asks, beyond equity, are there other instruments or approaches that elea engages in?
Maybe Jennifer, would you like to take the question?
Sure. Because we emphasize this partnership approach, we usually prefer equity. We usually, or like more rarely, we do also loans and grants, but we really emphasize on doing equity.
But maybe what we can add here is that equity investments can come in many forms and shapes. So a lot of our equity investments are not straight equity investments. A lot of our equity investments are also convertible instruments. So for the whole range from safe notes to convertible notes to a combination of instruments, even in some cases recoverable grants. But as Jennifer said, for us philosophically, we always see them as equity investments and would like to behave as equity investors from an early stage, and therefore also support the entrepreneurs to create the whole governance and the whole reporting that is necessary in order to be a good partner for equity investors, because ultimately that's what ventures need. Ventures in the end need equity in order to have risk absorbing capital. And it needs to be aligned with the strategy, and the constellation of the investors needs to be right. These are the fundamental points, and that's where certain technical differences of instruments can play an important role. But the emphasis for us is really on equity investments.
Thank you. Thank you. We have time for one more question. So I'll take the question from Levon. So Levon asks, drawing from your experience, how does philanthropy in adopting the philanthropic impact investing approach balance the need for social impact and need to demonstrate return on investment? What are typical return rates that you might look for?
Mm-hmm. Yeah. So first of all, when it comes to the balancing, I think the very important aspect is for us to try to find the ventures that don't have a very strong trade-off between creating deep impact and creating a growing and profitable business model. Our whole portfolio is built around ventures where it is a strategic priority to continue to work with the people who currently live in poverty in order to find growth and continue to build, and therefore also build these markets. So that's the whole strategy of these ventures. And therefore we are strong believers that while there are always trade-offs, they shouldn't be at the core of the models themselves. And if you are true to this logic, and if you invest in entrepreneurs who typically through their life story are very strongly attached to making this combination work, I think you can really deploy philanthropic capital with deep impact upside. Now, over time, what we see as the challenge when we speak about return expectations is that from a portfolio perspective, it's pretty clear for us. We expect to recover the principal amount of money that we have invested in the portfolio. We don't expect to be able to cover our strategic support cost, the cost of our team, through investment returns, because we believe it is not realistically possible at these small ticket sizes, which are inevitable in order to come in early. And so therefore, recycling the principal amount of capital is our strategy on a portfolio level. Now, if you break this down on a venture level, not every venture is going to succeed. So that means that on a venture level, successful cases, of course, we expect to return more than the principal amount of capital. And we would say it's a bit early still to come with a very finite expectation, but we have seen a whole range of roughly one-time return, which we felt very comfortable with when the result is building a strong value chain venture in agriculture, for instance, to up to three times our investment amount, so a 3x return in a digitally enabled, faster scaling, less capital intensive model we have also seen in our practice. What we always try to do is not to come in too early with a fixated return expectation, but to really, that's where we are very catalytic. We really come in assessing that there is a potential to eventually return at least 1 to 2x of our capital if it is successful. But we don't want to kind of lock in these expectations too early. That's where we are a very flexible capital provider, but we are, of course, very focused to work with the entrepreneurs to over time de-risk the model and then bring in people who have very clear return expectations. And therefore, we are truly operating as an investment organization.
Cool. Thank you. I know we're a little bit out of time for the Q&A, but we did have one more question. So maybe we can address that as well from Farina, who asks, does elea collaborate with social enterprise hubs, for example, in East Africa, like iHub, to advance your regional work?
So the answer is absolutely yes. Partnerships play a vital role throughout our investment process, and particularly when it comes to sourcing. And here, the important message to everyone involved with early stage venture builders is we are always very happy to engage in any kind of conversation with promising entrepreneurs at any time. So because as Jennifer said, we do our whole investment process ourselves. We are very happy to get to know entrepreneurs at the very early stage, and maybe we figure out they're not yet there for an investment from us, which is typically $200,000 to $300,000 at minimum. So maybe it's 2 years out, but then we keep the discussion going. And once they are ready, we are ready too. So we very much like to be just pointed to very interesting ventures and entrepreneurs anytime. And that's how we have a very broad network of partners in this earlier stage of the funnel and are always interested to explore further.
Wonderful. Thank you. Thank you both so much for your presentation. And of course, thank you to the audience as well for all your questions, and to Adrian and Jennifer for answering them so thoughtfully as well. Without further ado, we'll move on to the next segment for this webinar. I'll now pass over to Olaf, who is CEO and co-founder of bukaPO. So you heard about bukaPO a little bit in Elea's presentation, but now we'll give Olaf a chance to introduce bukaPO himself. So over to you, Olaf.
Thank you. Thank you, Erin. Thank you for the introduction. Let me share my screen. Okay, so thank you for, hi everyone. So delighted to be here. My name is Olaf Purvis. I'm the founder and the CEO of bukaPO. And thank you for elea Foundation and co-access to give me the opportunity to tell about bukaPO journey. So basically back in 2020, when COVID-19 pandemic hit, we saw something new take shape. Like many people stuck at home and began cooking and selling food to survive. And that's when we started bukaPO. At first, it's just a small social project to help neighbors to find customers. But soon we realized this wasn't just a pandemic trend. Even before COVID-19 pandemic, there were already more than 2 million home chefs across Indonesia, cooking from their own kitchen and often selling to their network. Now, just for your information, that Indonesia has over 280 million population with 100 million micro and small businesses. And also, Indonesia are the largest food delivery market in Southeast Asia with $4.8 billion annually and continue to grow every year. So this trend actually started back in the early days of social media, like YouTube and Facebook, when people start, beginning to learn how to cook and then bringing back their moms maybe and their grandma recipe and selling their food to their relative with the pre-order system. So they use their own network to promote it, turning their home kitchen into mini production space. That's when the term of home chef started to become very popular. Now, so we thought at that time, what if we could help them grow beyond their circle? From that question, bukaPO become more than just a social project. We become a platform for thousands of home chefs to reach more customers, earn more income, and create the community of home chefs that work as a team. But the more we get involved, the more we realize the challenge for home chef isn't just finding customers. It's the whole messy business process. Imagine their day from promotion, replying to orders, recap the orders, rushing out to buy ingredients, cooking the kitchen, packing the food, arranging delivery, chasing payment, and on and on and on. And it's a lot for one person to handle. So based on that reason, we created a better platform and ecosystem, which is a web-based pre-order community home cooking marketplace platform designed to make home-based business to become more efficient and effective. Now, by using our platform, they're able to simplify their business process, increase productivity, and the most important thing, when they save their time, they will keep their consistency of the food, as well as obtain the market outside their network. So we provide merchant with delivery service, supply them with raw materials, educate them, collect the payment, even provide them with the loan access, and all in one platform of bukaPO. Now, as most of them come from middle to low class, increasing their knowledge, skills, and motivation are significant. And this is the most challenging part of the business. And that's the reason we are here trying to secure the fund to professionally educate and motivate our home chef. But once they are equipped with the right knowledge, skills, and motivation, growth becomes unstoppable. Take Dayu, for example. She joined bukaPO 1.5 years ago, earning less than $200 a month. And today, she serves an average of 1,500 meals daily, with a team from none to 25. Rini began with the selling brownies, then expanded into cheesecakes, and now makes nearly 5 times her old revenue. Ayu started with fried chicken meatballs and now supplies to 2 hotels with 300 meals every day. And Monique, who joined 3 years ago, now caters meal for staff and management at 5 Stars Hotel with almost 1,000 meals daily. So our vision is to have the largest home chef community network in Indonesia and beyond that work together not only to survive, but to growth. Now, we believe at bukaPO, we're not just building a ventures, we're building community. Our home chef don't work alone. They grow through the program that connect them into both B2C and B2B model. Now, by joining bukaPO, home chefs earn not only from selling their own product, but also they earn commission every time they bring customer to bukaPO and by helping sell other home chef product. Every time they invite another home chef into the platform, they gain additional income. So basically, they have 4 sources of income of become our member. So basically, what we do is we're turning the collaboration into opportunity. Now, beyond income, we support with raw material supplies, delivery, and weekly training session. This cover everything from affiliate and referral program to photography, simple accounting, hygienes, digital marketing, equip Hem Chef with the tools not only to survive, but to grow. Now, since our beginning, we have grown from just 145,000 in 2021 to nearly 4.8 million US dollars in 2024. Last year alone, our income growth by 34%, while our OPEX increased by only 12%. This is show that our journey isn't just about growth. It's about building a sustainable social impact venture for a long run. Now, in the next 3 years, we projected an additional income of almost 48 million US dollars and profitable on the year of 2027. Now, to make Home Chef efficient and effective, we create a sort of ecosystem that able to save their time and double their productivity. Now, finding retail customers, where we charge 12.5%, finding corporate client with 10% fee, arranging delivery with 10% commission, provide them with raw material with 10% commission. But on top of that, we provide them with free education and training and offer them with zero interest working capital loan on B2B, as well as provide them with additional income through affiliate and referral program. Now, since bukaPO started up to June 2025, we keep on track the impact of bukaPO makes, and that's include job supported of 2,400, and then educate and training almost 1,300 home chef, gender equality as 93% of our home chef are women, and generate 13.4 million US dollar for micro and small businesses. Now, last year, we introduced our B2B models, a new chapter where Home Chef began serving daily meals for corporate staff, management, and special event. To be honest, this is for us a bit scary at that time, the hygienes and everything, because we're dealing with the big company. But what we start as an idea could quickly turn into impact. Within a year, over 20 corporations trusted us, including leading hotel groups like Marriott, Accor, and IHG. Today, our home chef prepare more than 3,500 meals every single day, and this only on the B2B model, creating nearly 70 new jobs for women from their kitchen at home to the table of 4 and 5 stars hotel. And this journey shows how far passion and opportunity can go. Now, our founding team comes from diverse background, ranging from entrepreneur to senior leadership in major corporation, such as commercial director of AirAsia and C-level in Blibli, one of Indonesian largest e-commerce. But myself has been an entrepreneur for over 25 years, and I had 2 exits. But what I'm most proud about our team is the execution level team, where the whole team works to create meaningful impact together every day. So we are raising $165,000, which the fund will be used for merchant acquisition of additional 5,000 and total number of training, education, motivational session of over 5,000 session. Now, every meal at bukaPO is more than just a food. It's a story of empowerment. With your support, we can help thousands of home chefs more, earn steady income, train new skills, and create a better future for them. Thank you, and back to you, Erin. Thank you, Erin.
Thank you. Thanks so much, Olaf. for your presentation and for sharing more about bukaPO. We actually have a couple of questions for you from the audience. We have one from Levon, which I think is a good follow-up because you mentioned that, now bukaPO has corporate clients as well, and you work with kind of big hotels and corporates. So Levon asks that, while it's great that there are a lot of these kind of home-based businesses, which is a great sign of entrepreneurship and the growth of the informal economy, there are also concerns around things like food safety, because these businesses, given that they're not, a traditional business setup, they might not necessarily need to adhere to food regulations or get the necessary certifications. So she asks whether this is a problem that you've faced before, and if so, how you've managed to overcome this.
Okay, so basically in Indonesia, if you want to have open a business at home, you don't need a permission. You don't need a permit to do it. Secondly, we continuously educate them about hygienes. And some of our home chefs that already supply to hotels, they actually get the training about hygienes from the hotels.
Mm.
And the hotels give us the standard operating procedures, and that SOP we use to all of our merchant. This is how you're gonna cook the food. You have to wash your hand before, all these things. I think that's about hygienes. And anything else?
No, I think
Within
I
the
think
question?
that yeah, I think that helps to answer Levon's question.
Yeah.
We also have a similar question about, some of the challenges that maybe you've faced in bukaPO's journey. So Jeremy asks, what's the biggest challenge that you've had so far, and how did you manage to navigate through that?
Okay. So the biggest challenge for us is actually, as I said before, it's uh, to motivate them,
Mm.
because some of them come with the really, because most of them is a low class, economic class with very low education. So one of the challenge that we face, the biggest challenge, is how to continuously motivate them, train them, educate them, and that's one of the challenge. And as I said before, that's the reason we come here to coexist. To you guys help us a lot to secure a fund for education, because we think we have a very good in-house team. But I think, if you want to scale, we need a really expert, like coaching, like all these motivators, like inspiring people that really push the home chef to the max. But yeah, we find like 300 to 400 home chef easily. They're very engaging and all these things, But some of them sometimes shy and all these things. So that's why what we need is really training, education, and motivation. That's the biggest challenge for us at this moment.
Yeah, thanks for sharing. And I think Olaf also shared a bit, what his ambitions are for bukaPO and kind of the support they need. So if you're interested in supporting bukaPO and their journey, you can feel free to reach out to Olaf directly or through Coaxis as well. We can help bridge some of those connections too. Olaf, we have one more question from Wei Li before we wrap up the webinar.
Okay.
And he asks, could you share how you manage the risk to bukaPO of the zero interest loans that you provide to the home chefs?
Okay. So basically, the zero interest rate, it's a B2B models. So basically, we supplying our merchants supplying food to hotels, right? To corporation, to electricity company. So what we do, the contract is between bukaPO and the company, right? So basically, all the payment will go through us. What we do is we providing with the cash advance working capital upfront as contract, and then after they done their job, uh, the company will pay us. So basically, I would say it's a very minimum risk. I almost I maybe I I'm under maybe I'm overstated, but I think there is no risk on it, because we also pick a client. We don't want some like small hotels or something. We really focus on the big hotels. And yeah, there is no risk because all the payment is coming through our company. So the contract is between our company and the hotels, and we also have a contract between Home Chef and on bukaPO.
Great. Okay, thanks so much, Olaf, for
Thank
answering
you.
all those questions and of course for your presentations. That actually brings us to the end of today's webinar. I'm just going to bring Adrian and Jennifer back up in the spotlight so we can thank them properly. We thank you, Adrian, Jennifer, and Olaf for taking the time to be part of this webinar and for putting together the materials for the sharing, and of course for Olaf for sharing bukaPO's impact journey as well. For the audience, we thank you for being so engaged and for asking all your questions. We hope that you've enjoyed today's webinar. Just like a couple of notes to end off, we welcome any feedback about the webinar and any ideas for kind of future webinars that co-Access and our partners host. You can feel free to subscribe to our monthly newsletter here to keep up to date on future events, updates on the different impact opportunities we have on the platform, as well as other resources and more. And you can also follow us on our social media to stay engaged and updated as well. Like I mentioned, if you would like a copy of any of the slides that the speaker presented, you can reach out to us at co-Access and we can help to send that across on behalf of the speakers. Or if you'd like to get connected to some of the speakers as well, feel free to reach out to co-Access and we can bridge those connections. Thank you all very much, and thank you once again to the speakers. Hope you have a great afternoon, and thank you for your time to join us today. Thank you.
Thank you.
Thank you very much, Erin, and
Thank you very
everyone.
much.
Thank you
Bye-bye,
very much
Thank you.
for joining. Bye-bye.